Welcome back to the Unusual Whales YouTube channel. In this video, I want to give you a quick overview of the live hot chains feed. This feed can provide you with multiple different ways to examine unusual options activity. You'll see options contracts listed on the left, followed by data specific to the contract. Let's start by going over the column headers. Last trade is the last time the respective contract was traded. Next, you'll find the contract in question, the ticker followed by the strike price, option type, and expiration date. DTE is the days to expiration. Next, you'll see the price the stock was when the last trade was executed, followed by how far in or out of the money it is. Last represents the price of the last trade. Percent change is the change in price from yesterday's close, so an option that closed yesterday at $100 that is now trading at $150 would have a percent change of 50%. After that, we have the contract's current open interest and volume values, along with the volume to open interest ratio. The number of dollars transacted on the chain is provided, along with the current IV. Percent total volume lets you know how much of the overall ticker's activity this contract is responsible for. Percent floor and percent multi let you know what percentage of the contract's daily trading activity is marked as a floor or multi-leg trade, respectively. The bearish and bullish premium bar provides you with a rough sense of knowing if the volume was on the ask or the bid side. And routing out the feed is a countdown to the ticker's earning date, along with the sector that the underlying belongs to. Now that we've gone over what data is provided in the feed, let's start talking about different ways we could look at unusual options activity. One way to start looking might be by raw volume, what has been the most traded contracts today. Another might be to sort by volume to open interest ratio, or maybe by the total premium. I think it's best to consider what unusual options activity typically looks like and to reverse engineer some filters from there. For starters, let's hide index and ETF tickers. There will be unusual options activity into sector-specific ETFs, regional ETFs, and the like, but especially if you're just starting out, I think it's best to ignore this flow. So we hide those. Now, a common characteristic of unusual options activity is a high volume to open interest ratio. So let's start by working around that. Let's flip on the volume is greater than open interest switch, but let's take it a few steps further. Now, these are just arbitrary numbers that I'll be using, so feel free to tweak these to best fit your needs. I'll enter an OI range of, let's say, 100 to 5,000, and let's look for at least 1,000 volume. For the premium value, let's start at $250,000 to start. Now, I've definitely seen unusual flow take place at much lower dollar amounts that resulted in extremely profitable trades, but in an effort to filter out as much noise as possible, it's best to not set the premium too low, in my opinion. Now, I also like to cap out the amount of floor volume and multi-leg volume to 5%. Again, we're just using arbitrary numbers to help us narrow down the entire ocean of options activity occurring. Now, you may be asking why the cap on floor and multi-leg volume, and to be brief, I think that floor activity can give traders a false sense that they're following more actionable flow. And the rationale for capping multi-leg volume is that we're just trying to create a filter to quickly identify flow without having to dig through the weeds to determine if the multi-leg activity is from a roll, a spread, or like a complex four-legged iron condor, something like that. So remember, it is possible for traders to leg into positions, and even trading activity that is not expressly marked as being multi-leg could in fact be one component to an actual multi-leg trade. So from here, you might want to sort between the most bullish and bearish chains. This will provide a look at the chains with the highest ask or bid side skew. You can use this to quickly identify potential put writing or call buying that could be deemed as unusual, given the rest of the filters that we've set in place. Obviously, you can also use this to identify call writing and put buying as well. You can click on a contract's expiration date in the feed to pull up additional data. Clicking on either the candle or the show flow button will pop up a new window with the flow feed for either the selected time frame or for the entire day. You should definitely check out the actual flow feed to analyze the transaction history and not rely solely on the charting. I hope this short overview helps you start thinking about different ways to utilize the feed. If this kind of overview is helpful, please let us know and we'll be happy to make more videos.